Why does it take inflation so long to slow down?
Yeah, well,
It's a tough one.
it gets going, and one of the main things is this wage increase, right? So things cost more, employees need to be paid more to be in the same spot, and inflation's actually been growing faster than the rate of wage growth. So roughly 7-8%, inflation, and 4%, 4.5% increase in wages overall during that same period. So everybody's going to start to feel more pinched, but that 4.5% increase in wage is still fairly significant because now, going forward, if inflation continues to even stay at the same level, that group is still going to be requiring more money. And of course, now we've got this job openings. There's a lot of them, so that doesn't give any power to the employer in terms of trying to price, the wages as far as that goes. So you get into this cycle where things kind of keep going, and it just keeps going up, and that's what keeps it up and keeps it rolling. This scenario right now, though, is a little bit different, just in the sense that you've got this massive pent up demand. The households and the businesses right now are super healthy. They basically, with low interest rates, they've refinanced their homes. They have saved money, because they weren't traveling. Businesses have refinanced their debt at low rates. And so there's a bunch of money floating around going into things. And on the household level, we've had a big overabundance going into goods. Things we can order on Amazon would be a good example. And, not as much going into services, which would obviously include travel, right? And those types of things. So that's going to start to even out. I know a lot of my clients are talking about travel now, and this summer, the fall, trips are being planned finally, and that'll sort of spread out. If there's tons of money going after goods and some of it starts to go after services, that basically brings down the demand in that good area, which will help. And that's where a vast majority of our inflation has come. But and so this is sort of absorbing all of that money that was put out, all of that stimulus money, and all of that savings that happened because people weren't spending on travel, weren't going out to eat for a while, weren't going to the movies for a while. And people were nervous even and just trying to accumulate. So that's what takes a while. In this particular case, we kind of need to burn through that money, and making interest rates higher, like the Federal Reserve's doing, makes the cost of business, higher. Not as many people can refinance anymore. When it was 2.5 to 3%, and everybody was at 4 or 5, they could refinance. Now it's at 5. Right, so not going to get money that way in the same manner as they used to. That should probably slow down the value of home price increases, at least nationally, which will also take some of this out. So, I've said the stat before, but we had a $36 trillion increase in household net worth from March of 2020, which was essentially the bottom of the pandemic for the stock market, to the end of last year. $36 trillion increase. Most of that increase came from stock market gains and housing gains. We've now had an 18% drop from the high, right, at the end of last year to on the stock market. That takes away trillions of dollars worth of household net worth across the board. And now with higher mortgages, you're going to see a scenario where you start to see possibly the house prices coming down, just because not as many people can afford it, the payment at 5% versus 3. And so, but it takes time, right? It takes time for those things to wind through. And right now, we just have so much money. The consumer doesn't care right now. Prices are up, 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 up. They just continue to buy because they're, retail therapy is alive and well right now, which is fine, right? I mean, that's what's going on. So it just takes time for that to happen. We did peak theoretically in March, so we'll see if it comes down again. Obviously April was lower. Is May lower? Is June lower? Then I think that'll start to excite the market, but still takes time for that inflation to work its way through, even if it does go down.